How to profit from Donald Trump's victory. According to Philip Van Dorn of MarketWatch, during this seemingly eternal election campaign with its twists, turns, and October surprises, the one constant was that Hillary led Donald Trump in most national polls. Early on election day, Levy, chief economist of Berenberg, said that a Trump victory would likely mean an immediate negative market reaction, and the dollar would likely depreciate against major currencies. Levy said that while he would expect the market to recover, the timing would depend on Trump's statements and signs of reasonableness from the new administration to comfort the market. Of course, President Trump won't have all the power. He will need the House of Representatives and the Senate to approve legislation. Action in overseas markets and U.S. stock futures pointed to a significant decline Wednesday morning, but panicking has been a fine recipe for underperformance recently. There have been two 10% declines in the S&P 500 SPX, plus 0.18% over the past 18 months, followed by quick bounce backs. If you are pouring money on a regular basis into index funds through an employer-sponsored retirement plan, major dips can be wonderful since some of your contributions are invested at lower prices. But all too often, individual investors buy high and sell low. So how to make money on Trump's win? Start by profiting off the fear. Gold isn't often viewed as the ultimate haven play. It tends to rise when the dollar falls or when investors otherwise get scared. Jason Brown, Chief Investment Officer and Portfolio Manager of FundX Investment Group, recommends the SPDR Gold Trust GLD, plus 0.26%. For those looking to play the recovery of the gold mining industry, he suggests the Van Eck Vectors Gold Miners ETF GDX plus 0.53. If you want to take a deeper plunge into an individual gold mining stock, Good Haven Funds GOODX plus 0.13%. Larry Pitkowski and Keith Trauner made a strong case for Barrick Gold ABX minus 0.12% in July. Brown also suggests investors consider emerging market ETFs, which are in the midst of a comeback. In a potential inflationary environment, he believes emerging market stocks would be strong, but overall, if people think commodities will do well, emerging markets will, regardless of who wins. Among the emerging market ETFs favored by Brown and the Vanguard FTSE Emerging Market ETF VWO minus 0.11% and the iShares MSCI Emerging Markets ETF EEM minus 0.08%. Brown also believes that there likely will be a return to the flight to yield that pushes up the utilities, telecommunications, consumer discretionary, and real estate sectors earlier this year. Many dividend stocks have pulled back during the election season. No matter who wins the presidency, the low interest rate environment will remain, and he sees investors struggling to make more than 2% on bonds. The 10-year U.S. Treasury note, TMUBMUSD 10-year, 10Y, plus 0.00%, now yielding at 1.8%. Those looking for income and willing to take on stock market risk may want to consider the Global X Super Dividend US ETF DIV, plus 0.14%. With the SEC 30-day yield of 6.91%. It has the highest FundX ranking among dividend ETFs. Another option for income as well as growth is the American Century Equity Income Fund, TWEIX, plus 0.11%, a large cap value fund with a 30-day yield of 1.72%. Healthcare stocks, the weakest sector this year, may continue to decline because legislation to clamp down on drugs prices or expand Obamacare seems less likely under a Trump administration. He might even succeed in repealing the Affordable Care Act. On the other hand, Trump's own plan to increase drug imports could pressure drug prices, so politics are likely to keep stock prices volatile. Thank you for watching the Shakaama channel.